Hello, everybody. Thank you for joining us at this Your Overseas Home webinar. My name is Christopher Knight, Senior Editor at Your Overseas Home and Spain Property Guides. Today, we will be chatting with Nicole Sandler from Buchanan about your financial considerations that you should be thinking about when moving to Spain. It's great to have you all with us, whether you're live or catching up on demand. We only have 30 minutes, so let's get on. Now, if you have a question, please type your query into the questions tab on what should be on the right-hand side of your screen. If you need a reminder of anything discussed today, or you want to share this with family and friends, a replay will also be available on the Your Overseas Home website to watch at your leisure. I'm just going to see if I can get this poll going. I'm hoping that you can see a poll on the right-hand side of your screen. If you can, then please put an answer in. If you can't, then I've obviously pressed the wrong button. But we'll see if it comes up. I can't see any answers coming in, so I'm going to assume it's not working. And I'll try and get that working afterwards. Well, in the meantime, while I try and do that, Nicole, perhaps you could start off by explaining who you are and how you can help, and how Buchanan can help our viewers today, and then you have a presentation.
Great. Okay. Thanks very much. I think perhaps the best place to start is for me just to very briefly explain who I am and what I do and how I can help. So I'm Nicole Sandler. I'm a private wealth manager for Buchanan, and they are a global independent wealth management company. I've been in the wealth management industry for probably closer to 16 years now. So if you've detected a slight twang in my accent, I'm actually from the Gold Coast in Australia. And that's where I started out in wealth management. And then I lived in England for over 8 years, and I worked for a company there called St. James's Place Wealth Management. I was based in the southwest of England. And then more recently, I've been in Spain for 8.5 years now, and I specialise basically in advising British nationals relocating from the UK to Spain, or for individuals relocating back from Spain to the UK, and for people already here. So I'm very much a cross-border specialist between Spain and the UK. I'm based in a rather small town called Javier. It's on the Costa Blanca, and it's directly in between Valencia and Alicante. It's just across from Ibiza. If you don't know it, I think it's one of the most stunning coastlines of Spain, but I'm probably biased because I live here. But what I'd really like to walk you through today is just to explain some of the opportunities for you to take advantage of when you're looking at transitioning from the UK to Spain, but also to be aware of some of the, I think, avoidable mistakes to take into consideration, because the whole point of this information is to allow you to then be able to transition from the UK to Spain in the most tax efficient way possible. And I think the key objective that I personally have, and the key takeaway for yourselves, is the absolute importance of forward planning. So I'll talk about planning a lot, and I'll touch on it towards the end, but it's so critical to get right, because it then will allow you, as I say, to come across here in a really tax efficient way and start a fantastic life in Spain in a really, really good position. So I'm conscious of time, so I want to start by talking about the Spanish tax year and tax residency. The Spanish tax year is probably the easiest part about Spanish taxation, because it's a calendar year. So it's from the 1st of January to the 31st of December. And then residency is really important, because this will typically dictate when in the year you should move to Spain, and you have to be really careful about when that is. I'll come to explain as we go through. But you're deemed to be a Spanish tax resident if you spend more than 183 days, so that's 6 months or more in a calendar year in Spain. If you spend 6 months or more in Spain, you'll be a Spanish tax resident for the full year. There's no partial year or split year treatment in Spain. it's for a full year. So that's quite different to the UK already. Or perhaps if your centre of economic interest or influence is in Spain, like your job, or if your dependent spouse or children are resident in Spain. So for example, if you're an offshore worker, there's a lot of offshore workers around where I live and throughout Spain, and that can make you Spanish tax resident. So just to say, it's not necessarily about the length of time that you're in Spain, it's these other factors that are important as well. So what I'll take you through over the next few slides are your fiscal obligations once you become a Spanish tax resident. So the first point is you need to report something called a Modelo 720. I'll come to explain it. Then you are subject to tax on your worldwide income and gains once you're a Spanish resident. So you've got income tax, capital gains tax, wealth tax, and something called succession tax, which is basically inheritance tax in Spain. And it works in the complete opposite way than it does to the UK. So I'll go through each one of those. And just to say, there are double taxation treaties between most countries now in the world, but certainly between the UK and Spain. So that would apply, for example, if you had to pay tax in both jurisdictions, you won't ever pay tax twice, even if there is tax due in the UK and Spain. So we'll start with the Modelo 720. So all this is, it's just a declaration. It doesn't result in any tax. And what you need to do is report to the Spanish tax authorities any overseas assets that have a value greater than 50,000 euros. So it's only for foreign assets. It's a foreign asset reporting form in Spain. So it's due at the 31st of March each year. And the good thing is you don't need to keep redoing it every year unless something has changed or unless the value's increased by 20,000 euros. And essentially the three different categories that needs to be declared are bank accounts, overseas financial assets, and property. It is an individual tax declaration, but if you do have jointly owned assets or jointly owned bank accounts, for example, you do need to declare the total value, but then you simply specify what your percentage ownership is. I'd probably point out at this stage, in my personal view, I think it's quite good to connect with a good accountant stroke lawyer quite early on when you relocate to Spain, because they're the ones that will be submitting your Modelo 720, your income tax returns, wealth tax returns, everything to do with Spanish taxes. They're the sort of gatekeeper to the Spanish tax authorities. But what's quite useful in Spain as well is that it's usually a lawyer and an accountant is either the same person or they work very closely together. So then you've got one contact that you can use for all of your tax declarations and returns. They can set up a will. They can obtain all of your residency documents as well when you arrive. So it's quite useful, I think, to find a good contact early on at the outset. So that's the Modelo 720. For some reason, I think people, it can feel quite daunting if you read things about it online, but I don't know why, because it's just a declaration, as I say, it doesn't actually result in any tax. So that's the first submission. That's at the end of March each year. And then you come to income tax. So I mentioned before, once you're a Spanish resident, you're subject to tax on your worldwide income and gains. And then what they do with income tax is they split it into two different areas. It's the general rates of income tax and what's called the savings rates of income tax. The saving rates include capital gains tax, dividend income, interest income, purchase annuities, income from life assurance contracts, for example. That's all within the savings rates. And then everything else is what's covered by the general rates of income tax. So most pensions are subject to the general rates of income tax, earned income, rental income, that's all under the general rates. So then you've got the state Spanish rates, and then you've got the regional rates, which I'll come to talk about. And your income tax return is due at the end of June every year. So say, for example, you'd moved to Spain in 2022 and you were here for more than 6 months in the calendar year, Next year, at the end of March, you would need to submit a Modelo 720 for foreign assets. And then at the end of June is when you would need to submit the income tax return. So then I mentioned you've got the state rules and the regional rules. And there's actually 17 autonomous regions throughout Spain, which makes my job really entertaining because I have clients all throughout Spain and I need to keep up to date with all the different autonomous regions. But the rates really do vary. The state or the national rates for income tax will range from 19% up to 47%. And then where it differs, it will typically be within a few percent of 47%, depending on what region of Spain that you live in. And what I'm talking about at the moment are the general rates of income tax. I'll show you the savings rates in a moment. And there is also a personal allowance per individual in Spain. It's 5,550 euros. And then there's additional allowances if it's applicable for you. So for example, if you submit a joint tax return, there's an extra allowance. For certain earned income, there's age allowances. Children and dependents and disabilities also have additional allowances. So again, it goes back to my comment of having a good accountant that can help from the outset, and they can understand your individual situation, and then they can apply any additional allowances to help minimize your general rate of income tax due at the end of June each year. And then these are the savings rates. So this includes capital gains tax, and it's split into 4 different bands ranging from 19% up to 26%, which is quite a recent addition. It used to be 3 bands. But I think with income tax in general, just to summarize, we've got the 2 different bands of the general rates and the savings rates, and it's due at the end of June each year. So I'll move along to wealth tax, which I think it has quite a checkered history in Spain. It's not very popular, but it's one of these taxes that's more popular now, I think, around Europe and the world in general, especially post-pandemic, where governments need to generate more tax than ever. So what this is basically where you would need to have a look at the value of your assets as at the 31st of December each year. And then there's allowances. So the state rules state that you have a personal allowance of 700,000 euros. And if you're a Spanish resident, you also have up to 300,000 euros for the main home. So you've got 1 million euros per person, 2 million euros per couple, and only the excess is subject to wealth tax. It's really important to stress that, because a lot of people can find this quite daunting, but it's only the excess over the allowance that's subject to wealth tax. And then the rates range from 0.2% up to 3.5%, but that's only for estates that have only, have over 10.7 million euros. Again, each region has slight variations on their allowance. So for example, where I am in Comunidad Valenciana, we don't have 700,000 euros. It's been reduced to 500,000 euros per person. Madrid, they don't have any wealth tax. The rates in general are quite good in Madrid. And Andalusia did a great thing this year. They completely abolished wealth tax. They're trying to attract affluent people, and they've had some great tax reforms, I think, over the past couple of years. And then after that was announced in Andalusia, Spain came out in general, the state, to say, well, we're now proposing to have what's called a solidarity tax just for 2 years, for 2023 and 2024. But that's only for individuals whose wealth is over 3 million euros. And then a lot of people have asked, well, if I've got this solidarity tax, if I am in that area, what happens then with wealth tax? And the short answer is any wealth tax already paid would be taken into consideration so that you don't pay the tax twice. But that's wealth tax, and it's due around April each year. So you've got the end of March for the 720, April for wealth tax, and then the end of June for income tax. Okay, I'll come now to talk about Spanish succession tax. So this is basically inheritance tax in Spain. And it works in the complete opposite way to the UK. So I'm conscious this is a really busy slide, that there's a lot to say, but if you can try and not read it, and I'll try and explain it in a really simple way. It's basically due if either of the two scenarios take place. The first is if you live in Spain and you're a Spanish tax resident and you inherit anything from anyone in the world, then succession tax is due because you live here as a Spanish tax resident. And that includes from your spouse as well, which is obviously different to the UK. So that's the first point, if you live in Spain as a resident, or if the asset is physically in Spain. So for example, if you have a Spanish property and you leave it to children or grandchildren or friends outside of Spain, because the asset is a Spanish asset, succession tax will be due. So if the beneficiary is in Spain or the asset is in Spain, it's going to attract Spanish succession tax. And what's quite different to the UK again is that it's the beneficiary that picks up the tax bill. So if I inherit from anybody in the world, I'm the one that has to have the funds to pay the tax. In the UK, it's quite clean because it's deducted from the deceased estate. You then have 6 months in Spain, to declare it and pay the tax that's due. How the calculation works, the methodology is the same all throughout Spain, but then the rates and allowances differ greatly depending on which autonomous region that you'll be living in. But what happens with the start of the calculation is they'll split the beneficiaries into 4 different categories, depending on the closeness of the relationship to the deceased. And typically spouses and children will have the greatest amount of allowances to reduce the succession tax that's due. They also have a multiplier effect in the calculation, and that it's also dependent on what the recipient's net worth will be. So it can be quite complicated. I've put on here that unmarried partners pay high taxes. So this is quite important, I think, because if you're not married, don't worry, I don't need to suggest to get married anymore for tax reasons. It used to make good tax sense, but recently, over the past several years in Spain, they've now allowed it to say that if you're not married, but you're in a relationship, you can actually register that relationship via a notary or a lawyer in Spain. And what that means is that then you're treated as if you're a spouse for tax purposes. So I highly recommend to do that if that is yourself. It's really simple and quick to do. But then the succession tax rates range from 7% up to 34%, depending on who you are with the relationship. And I mentioned already that the rates differ greatly around Spain. So I think this is probably the area that has the most differences in the tax rates. Succession tax or estate planning in general is actually something that I focus on a lot with my clients. So it's not just about investments, but estate planning is really, really important when you have international families and international assets, because I think succession tax can actually be a really harsh tax in Spain, but it doesn't need to be. In fact, you can dramatically reduce or even avoid, in some instances, Spanish succession tax if you plan ahead. So it's really going back to what I said at the outset. You need a strategy in place before you move here, and once you're here, to help reduce these sorts of taxes where it's possible. And so hopefully that made sense. I know I'm going through this really quickly and it's quite complicated, but this is just a very high level introduction to the world of Spanish taxes. So in the realm of estate planning, a Spanish will, or wills in general, are so important to have in place and for you to keep up to date so that your assets pass to your chosen beneficiaries. And in Spain, they operate what's called a forced heirship system. So it actually derives from a very long time ago from a Napoleonic code, where it's all about forcing assets, a forced heirship system, which means it's going through bloodlines, basically. So as opposed to the UK, it's a common law system, and your assets can pass to whoever you want in whatever percentage terms that you want. But a really great move that happened back in 2015 in Spain and in Europe is that this piece of legislation called Brussels 4, it's probably not overly catchy, but it is to me, it swept through Europe. And what that means is if you want your country of nationalities law to apply to your Spanish will, you can have that. So for example, if you're from England and you want English law to apply to your Spanish assets, which mean you can pass them to whoever you want. You can leave the whole lot to the cat charity, if you like. You can do completely what you want in whatever percentage terms that you want. Because if you don't stipulate that, the system of Spain is that a third would go to a spouse, a third to any children, and then a third is up to your discretion. And then it obviously changes depending on your individual situation. So 99.9% of British nationals in Spain have opted for their country. That I did make that statistic up, but it's probably accurate in my experience anyway. But most of them do opt for their country of nationalities law to apply because common law is much more flexible. But don't worry about remembering that. It's something your lawyer would explain to you when you do set up a will. So you need one as soon as you have assets in Spain. You'll be pleased to hear I'm finished on the taxation and estate planning side of things. And I just want to briefly cover what to avoid, basically, which all comes down to timing. So the first one is that UK tax-free savings products like ISAs and the national savings and income products like premium bonds are fully subject to tax in Spain. So these are great in the UK because you take the proceeds tax-free. So I'm just flagging this at this point to say, if you are moving to Spain, careful consideration needs to take place as to should you encash these now, do it whilst you're a UK resident so that it's free from tax. That's the first point. And then offshore bonds that aren't Spanish tax compliant. All that means is a Spanish tax compliant bond is liked and approved by the Spanish tax authorities. So if you do have an offshore bond even, and it's not Spanish tax compliant, it's not going to offer you the same benefits as it would in the UK. And in fact, in some cases, if it's in a grey regional area or a blacklisted regional area, it can actually be penalised very heavily in Spain, and the reporting can be quite complicated. So again, you need to have some consideration, I think, over an offshore bond. One of the most important points perhaps on this slide is the sale of your main home. If you are going to sell it, definitely sell it whilst you're a UK tax resident, because then it's free from capital gains tax. And remember, I said at the beginning to be careful of residency and timing. It's important that you don't sell it and then move to Spain and then spend 6 months in the calendar year in Spain. And then actually you're a Spanish tax resident for the full year, and your UK main home would therefore be subject to capital gains tax. So again, you just need a strategy in place with the timings of what to do and when and why. So that's very important. If you do want to sell it or at least downsize, consider that before you change residency. Same with your pension in the UK. You're probably familiar with the fact that you can take up to 25% tax-free from most UK pensions. That's a UK rule. So if you move to Spain and then decide to take it, you can take the 25%, but it's fully subject to tax in Spain. And, you know, it may not be appropriate for everybody to take that 25%. You do need a conversation, I think, as to whether that's appropriate. But if it is, again, take it whilst you're a UK tax resident. So you're taking advantage of that benefit. The final point on this slide is that Spain do not recognise trusts. I mentioned before that the UK is a common law country. Spain is a civil law country. Trusts are very much a common law instrument. In fact, they derive from medieval times in England. And Spain don't understand them. They don't want to understand them. And what that means is that it's totally transparent from a tax point of view. So they don't work in Spain. So again, if you do have any assets in a trust, it needs some consideration and to look at that position before you lose your UK residency. And one of my final slides is just, I think, firstly, it's a checklist, basically. So speak to a regulated. Regulated's really, really important now. Speak to a regulated financial advisor before you make the move to Spain. When people say, well, you know, what time frame ideally should I give? If you can, I would recommend 12 months or more. If you don't have that amount of time, that's fine. I think any advance warning is ideal because then you can move across here in the best way possible from a tax efficiency point of view. This next point in bold is often forgotten. I think people focus on tax and logistics and property, and this is forgotten since Brexit. UK financial advisors unfortunately cannot provide you with financial advice once you're no longer a UK resident. They have to leave you at the UK border. So they can't advise you unless they've actually sought European permissions and regulation, which most of them haven't. So keep in mind, if you've got a UK pension or UK investments, obviously you can keep them, but you can't receive any advice, even for really basic things like you need a withdrawal, the funds need to change. You can't do any of that. You may need to even fly back to the UK just to have that advice. And even then, it's not supposed to work like that. So just to be mindful of that, you can keep investments, but you can't unfortunately have any advice. So you will need to find a local advisor that has that cross-border experience between the two countries. The next 2 points, I think I've mentioned enough already. It's basically what I would recommend is to reach out to somebody like ourselves and just to list the income and the assets that you have, the approximate value, where they're located, what they are. And then it's just to have a review and to say, look, if you moved across with these, this is a tax position between the UK and Spain. Versus if you did restructure your estate, even to some extent, this is the reduction of tax, and then this would be the most efficient way to move across. So it's going through a financial review or checklist, I think, at the outset. And the main home is one I've already mentioned. Sell it whilst you're a UK resident if your plan is to sell it, and then it's not subject to capital gains tax in either country. And I'm going to put my contact details on the screen. Sorry, I feel like I've been talking really quickly, which is a bias of mine. There's so much to cover. This is the tip of the iceberg, to be honest. And I'd just like to finish by saying I think Spain can feel quite complicated and daunting from a tax point of view because it's so different to the UK. But like I said at the outset, it doesn't need to be. You can actually set yourself up really tax efficiently in Spain if you do have the opportunity to plan ahead. So if anyone would like to reach out, by all means, feel free to contact me. I'm very happy just to help you and explain how it works in more detail for your own personal situation.
Brilliant. Thanks very much for such a comprehensive explanation of the tax system there. We've had a few questions from the US, and I believe your Chase Buchanan are also able to work with American clients.
We are. We actually one of my colleagues is fully regulated by the US. In fact, it's really rare to find somebody here because of FATCA and US regulations. It's really hard to find somebody that can help. So we do have that cross-border advice. It's not myself, but a colleague of mine, Alex Ingram, is fully qualified to help with any US nationals. So yeah, happy to help with that as well.
Brilliant. And our poll did work, I'm glad to say. And yeah, tax was the main thing that people were worried about, and people are not so worried about pensions, I'm glad to say. But I suppose they will be if they find they're being taxed heavily on them. I know that lump sums are a particular issue in the UK, aren't they? When you get your lump sum, you need to take that before you move to Spain, or it's going to be taxed.
That's exactly right. Make the decision, and it may be that it's not the right thing to take it. It depends on your personal circumstance. But if it is, if you think you will need access to that cash, absolutely take it as a UK tax resident.
Yeah, I think the message really is that you've got to speak to you before you move, at the earliest possible point.
Ideally, I mean, it's what we all do day in, day out, is to speak to individuals. And what I would recommend is to start off talking about residency and timings. And then obviously the logistics of needing a visa is a whole nother conversation. So what I typically do is it starts off with a lot of plates spinning and a lot of information. And I'm quite regimented with the way that I work. I like to create a clear timeline for individuals so you know exactly what you need to do and when. And then I think, as I said earlier, once you make the right move and it works in a really tax efficient way, it just starts life off in such a great way where you've wanted to move to. So definitely having that strategy in place is really key.
Okay, we'll just go over a few minutes because there are lots of questions. Just to say, if you couldn't see the slide presentation, I know a couple of people have had problems. You will get a recording of the webinar, and you will definitely be able to see them there. And you can contact Nicole. I'm sure if you just Google Nicole Sandler at Chase Buchanan, if you can't see the slides, you'll find her contact details very easily. In the meantime, we have a few questions. Now we've had one from, I'm going to find his name here, Chris. Chris doesn't want to become a Spanish resident, but he just wants to buy a property to earn some income on it, presumably from rentals. What are the tax implications for that situation?
That's fine. So you'll remain a UK resident, then you can spend up to 90 days in Spain within a 180-day rolling period, just from a residency point of view. From a tax point of view, you'll have to submit tax returns in Spain, and that's quite easy to do as a non-resident. Your accountant can do that for you. If you rent it out, it will be subject to income tax in Spain. If you sell it, it'll be subject to capital gains tax in Spain. So, of course, absolutely fine to do, but it's just subject to tax in Spain, and you can just do that quite simply as a non-resident. Again, I'd recommend to find an accountant, and they can do all of those submissions for you quite easily.
Okay. Now we've had a question from Laurie, who has said, I have a life policy written in trust to my children. Is that trust no longer valid if I become resident in Spain?
It would just be viewed as transparent. So anything in a trust is taxed on the individual who owns the policy. We'd need to look through it. Trusts are quite complicated because there's various different types of trusts. So I would advise that we look at exactly what it is and how it works, and then we can advise you more specifically.
I was muted, sorry. Can I just ask a general question? Would you say, from your experience, that people find they are taxed less when they move to Spain than they are here?
To be honest, I think people become positively surprised, because if you start to Google Spain and you end up on sort of page 7 of Google, and it starts to look really bad, and there's all these bizarre stories out there. And then when people can do it properly and efficiently, I always hear that, it's actually not too dissimilar to the UK. The UK personal allowance is better, I think, and you don't have wealth tax, and succession tax or inheritance tax in the UK works perhaps more favourably. But if you are in a position to restructure your estate or to move across with a certain time frame, I think you'd be pleasantly surprised in Spain. That's what I typically hear the most. People say it's actually not too dissimilar. I think post-pandemic as well, and given the state of the world at the moment, governments around the world are only going to be increasing taxes. So you may as well live where you want to live rather than being dictated to by taxes. Sorry, it's quite a long answer to your short question. I talk a lot.
That's a good answer. Okay. We've had a question. I'm not sure I understand it. Perhaps you will. What conditions, from Laurie, this is from Lance, what conditions would mean we should think about opting for Beckham's law, a flat?
Oh, Beckham's law.
Beckham's law.
Yeah, it's an accountancy rule to help minimize income tax, basically, where there can be a quite beneficial tax rate for the first 5 years. Yeah, I would need to understand quite a lot about the income and the employment side. I mean, I'm not an accountant, but I understand the Beckham rule. If you contact me directly, I can explain it to you in more detail if you like, because I'd need to know more about your personal situation. But it could be an option.
Okay. One from Richard. If I had Spanish residency, how much income tax would I pay on my UK workplace pension?
So it goes back to those sliding rates that start from 19%. It completely depends on which autonomous region you live in, but your UK pension would be subject to the general rates of income tax in Spain. Just to say, if it does help as well, because I'm conscious I'm talking about facts and figures, we do actually have a tax guide. It's just a PDF brochure. If anybody wants that, I can email it to you, and then it may highlight the region that you're looking in, and you can see your own tax rates. But the UK pension is subject to the general rates of income tax, which will start at 19%.
Okay, well, look, we've still got questions coming in, but we've gone well over our time now. So, and Nicole's details will be sent to everyone who's here, who's registered, and I'm sure you'll be able to answer those questions individually or set up meetings. Thank you once again, Nicole, for your insightful tips and advice. We do strongly recommend that you get in touch with Chase Buchanan to discuss your personal requirements in detail. And well, we just wish you the best in your move to Spain. Thanks again, and happy property hunting. And thank you, Nicole.
Thanks very much.